Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to get you better returns in the stock market. I'm here with our host, Robb Fahrion. He's the CEO and founder of Flying V, our digital marketing group. Rob, so glad you were able to join us on Enrique Abeta Tribute Day. We both decided to wear, black V-necks. So if this were like finance Halloween, we're going as Enrique. Now we just need some tattoos.
Yeah, no one better that I'd rather dress up as. He's the man. So yeah, that works for me. Tribute day for whatever reason.
Yeah, well, we're all Enrique fans here at Deep Knowledge Investing. So,
Very much so. Very much
yeah.
so. We have a great episode today as well. We're shooting a day early, so today's actually Father's Day. So happy Father's Day to all of those that are out there and listening. Happy Father's Day to my dad as well, if he is listening. We got a great episode, and in honor of Father's Day, it's the Fed has no idea what it's doing issue, which is great. Which is a great segue into what we're going to be talking about: CPI, Fed raising, tightening debt plot, lack of confidence, inflation down, but people still unhappy. And then we're talking petrodollar as well. So a lot of big macro topics here on this episode. Gary, any call outs? Happy
Rob,
Father's Day.
given all the financial disaster you just mentioned, this feels like bad timing, but happy Father's Day to my dad as well. Dad, don't know if you're watching this, but either way, the sentiment is good. Just so you guys know, I did give him a call early this morning, but haven't had a chance to speak with him yet.
Great stuff. Let's jump right into it, Gary. Thing number one in this week's edition, the CPI comes in light. We're talking consumer price index.
Yeah. So the consumer price index, the CPI, is the index that people usually are talking about when they discuss inflation. When people say inflation is up 3% or 5% or 10%, the CPI is what they're looking at. Now, there are a couple of issues with that. One is the CPI, we've talked about this a million times. It is manipulated in a lot of ways to make it lower than it is. The actual expenses that people have, I believe, are much higher or rising at a higher rate than the CPI. The other thing is the CPI works from a kind of a generic basket. And what that means is that your personal CPI, your personal inflation rate is going to differ. And so, for example, one of the things we saw in 2022, 2023, what went up? The rental prices went up, the price of a mortgage went up, food prices were up a lot, energy prices were up a ton in 2022. Obviously, that, some of that reversed last year and part of this year. So a lot of your personal CPI, in fact, the price of used cars skyrocketed in 2022. So a lot of your personal CPI depends on what your personal needs are. So in my case, I locked in my mortgage in November of 21. And then and I didn't need to buy a new car. So I was relatively insulated from inflation. People who needed to buy a new car, people who had to move for work and buy a new home, people who spend a high percentage of their paycheck on things like food, they had a very different experience. So it's really important to point out that when we talk about the CPI, we talk about aggregate numbers, but as they say in so many other situations, your mileage may vary. So what we got this week was the May CPI came out, and it was at 3.3%, which is substantially above the 2% target that the Fed has, which I will continue to insist is 2% above the correct and moral rate. And people got very, very excited because they were looking for 3.4%. So it was 0.1% better. Now, I'll also point out that the Bureau of Labor Statistics, which is the government agency that compiles this information, they are not capable of measuring anything to within a tenth of a percentage point. And I'm not making fun of them there. I know it sounds like I might be, but the truth is, go try to measure the price levels in an economy and a country as large as ours, and you're not going to get that close. So, the other thing we saw is the sticky core number continued to decline. And a lot of people, they were excited by this lower than expected CPI, which again was 3.3%. But worth pointing out, that index a year ago was at 3%. So, all this whole talk about disinflation has just disappeared. And inflation, it came down 0.1% from last month, but it's up 0.3% from a year ago. Again, people got excited. They thought this was going to force the Fed to have to lower the Fed funds rate. And so that caused the market to go up on this.
Gary, I know one of your problems with this calculation is that there's some sort of exclusion, right, of things that people need to buy, that's determined by someone man behind the curtain, right? My question is, how is that determined? What's in terms of what's included, what's not in this calculation?
That's a great question, Rob, because I think the question you're really asking is, okay, we get the data, but how do we interpret it? How do people interpret it? And it's important not only to know how you interpret it, but it's important to know how other people do as well, because that will give you a sense of the direction the market will go on it, right? Knowing how people will respond to news is a valuable skill. And I think that's what you're asking. I think it's a really good question. The issue with this is we started with just the regular CPI, and then people started to calculate the core CPI that excludes food and energy. And supposedly, their reasons for doing that is those are volatile categories, and we want to take volatility out of the CPI. And, anybody with a brain will say, okay, great, but does that mean people don't need to buy food and energy? Right. And the answer is, of course they do. Okay, so you're going to exclude that. Last year, 2 years ago, people started talking about super core, which excludes food, energy, and shelter. Worth pointing out, shelter is just a fancy name for housing. But, off the top of my head, I think shelter is something like 33% of the CPI. Um, uh, Food is, I think, around 14%, and then energy, I don't remember the number, but it's a substantial number. So what they're doing is they're excluding more than 50% of the CPI, right? And then saying, but look, inflation is down. Okay, great, but you're excluding the and I keep seeing more and more of this where they're excluding, certain goods, if you exclude services, if you exclude, restaurant prices. And, this is your regular reminder that if you were to exclude everything from the CPI, it would be flat, it would be zero. So congratulations. If we excluded all, the price graph of things that have no price or that of nothing is flat. It's zero. So I'm not a fan of this kind of analysis. And I saw some of that. There were people declaring victory. Paul Krugman is one of these people. He's not somebody, I think he's more of a political cheerleader than an economist. Um, he's more famous for his political takes than having good economic takes. But what he'll do is he'll exclude enough nonsense. He'll exclude enough stuff and say, hey, if you exclude all this stuff, then you really get to inflation is zero and we've defeated it and we've won and the Fed should lower rates now. Okay. Well, again, Krugman is a political hack, not really an economist. I mean, I know he has an education as one, but he's always advocating for the same policies when his party is in the White House. So, I'm not a fan of this methodology. And I saw a lot of that on Twitter or X this week where people were, they basically said, if you exclude enough stuff, inflation is zero. The Fed should lower rates now. Okay. But that's not how it works. And it's also, it also ignores the experience of hundreds of millions of Americans who don't get to exclude food and energy and shelter and services. People have to buy this stuff. So it's just not analysis that I like, nor analysis that I put a lot of a weight on.
Moving to thing number two, Gary, we're sticking on the Fed. The Fed raises and tightens the dot plot here in thing number two of this week's five things.
Right. Well, so we got the CPI Wednesday morning at 8:30, and the Federal Reserve concluded their June meeting and put out their press release at 2 p.m. And so as soon as the CPI came in light, people started betting, hey, maybe the Fed will either lower the Fed funds rate at this meeting. They did not. They held. They kept the Fed funds rate the same. And the other thing that they were going to look at is the dot plot. Now, that can be a little confusing. Don't worry, we're going to put up a chart here. But the dot plot is done 4 times a year. And what they do is they take every member of the Federal Reserve, every governor, and they have them mark on a plot. Here's where I think interest rates will be at the end of this year, next year, the year after, and long term. And so we rolled into this year with expectations of 6 rate cuts. And then by the last meeting in April, that had been reduced to 3. And, the doves who had seen the weak CPI and the weak economic data last year, sorry, pardon me, last week, came out and they said, hey, maybe the Fed will reduce that to, sorry, at least be at, 2 or 3 cuts. Well, that didn't happen either. The median went from 3 cuts down to 1, and the bottom of the range came up. This is a more hawkish Fed than the market believes right now.
Gary, what are we looking at? We started the year with expectation of 6 rate cuts, right? And then at the April meeting, they cut that in half to 3. You've got some people saying that there might not be any rate cuts for the rest of the year. Curious what the call is from DKI. When is this going to happen? What's going to happen? I think I'm familiar with what your take will be, but curious on specifics too, if we will get any rate cuts, and potentially what that looks like and when.
Yeah, my answer hasn't changed on that from when we talked about it a week or two ago. I think at that time I told you if the Fed cuts, it'll be 1 and it'll be December. I just don't, unless the economy really falls off of a cliff, I don't see them doing that around the November election. Anything they do in September would come too late to provide stimulus that would help the party in the White House right now. Um, and it would leave the Fed open to allegations that they were playing political favorites. It's something that they would like to avoid. There are a lot of people now saying that the Fed needs to cut rates now because the interest expense that we have is very high, right? I mean, we crossed $1 trillion this year, heading for probably 1.5, $1.6 trillion run rate by later this year. And so there are people saying, the Fed needs to cut rates. And I don't know that they do. Um, I think expecting the Federal Reserve to cut interest rates to accommodate a Congress that is overspending by trillions of dollars a year. I mean, they could do that. And, if you want to know where that ends where Japan is, right? Japan has gone from 102 yen to the dollar to, I think, 156, 157 yen to the dollar. It'll most likely, it was heading its way toward 160. That is, that's horrible. And so, yeah, can the Fed cut rates and bail out Congress and the Treasury? Sure, they could. But what will come with that is a huge amount of inflation. In the end, everybody's looking at the Federal Reserve, but the real people who need to solve this problem are the ones in Congress. In my opinion, this is a bipartisan problem. One of the things I should have grabbed it. Somebody on Twitter last week put up this great chart of U.S. debt for every president since Carter. And when you look at it, you realize there's sort of this belief that the Democrats are the ones overspending and the Republicans are the party of fiscal sanity and conservatism, and it is simply not true. President Reagan was a big spender. Both President Bushes were a big spender. President Trump was an enormous spender. And so this idea that we can vote out the people who are spending a lot, vote in other people, and fix it. That's simply not going to happen. Republicans overspend as well. Debts and deficits go up during Republican administrations. So basically, Congress needs to solve this. They're not going to, because there is no party right now in favor of fiscal restraint. So I think this problem is going to be with us. The question is whether Jerome Powell and the rest of the Fed wants to help solve the problem without Congress having to modify their behavior, or alternatively, continue with the Fed funds rate this high and continue to put pressure on Congress. And what this really reminds me of, Rob, is it's almost like being the parent of a kid who has a drug addiction. And the kid comes to you and says, I'm suffering, I'm going through withdrawal. I need money so I can buy more drugs because I'm in horrible withdrawal. And what do you do, right? No one wants to watch the kids suffer, but having to buy more money, giving them more money so they can buy more drugs doesn't fix the problem either. And Powell's in that position right now. Lowering rates to accommodate an overspending Congress will simply extend the problem. And when we have to deal with it, it'll be a bigger problem. Now, whether he's willing to do that or not, I don't know. But again, this is a bipartisan problem. We cannot vote our way out of this. Whether you're on the left side with the Democrats, on the right side with the Republicans, there's nobody who's a voice for fiscal restraint right now. So something's going to have to give. I don't know that it'll be Powell. It could be, but I don't know that it will be. That's a really long answer to a simple question, Rob. Sorry about that.
No worries, no worries. Very interesting, and think we continue on the Fed has no idea what it's doing issue. Speaking about the Fed and thing number three, which I know is going to probably be similar conversation. The Fed highlights its lack of confidence. Interesting quote coming from Powell. I'll let you touch on that here in a minute.
Yeah, so the moment in so typically what happens for those of you who are, not spending your afternoons watching the Federal Reserve, which, why anybody wouldn't want to spend your Wednesday afternoon watching the Federal Reserve, I don't know. But the way it works is the Federal Reserve, when they conclude their meetings on Wednesdays at 2 p.m., they put out a press release, and that press release is usually around 3 or 4 pages, something like that. And everybody looks at it to see where they've changed the language. And they're also 4 times a year. There's the dot plot, and they have some other charts they make available in the exhibits. And then at 2:30, Powell goes to his press conference and he stands in front of the reporters and he delivers some prepared remarks that don't take that long, maybe 5 or 10 minutes, something like that. And then he'll spend the rest of the hour answering questions from reporters. And, the nutty thing about this is every reporter basically asks a different version of the same question, which is, when are you going to reduce interest rates? And, Powell tells them he's data driven. He tries to give them straightforward answers, and he does a really good job trying not to look annoyed. He does not always succeed at that, but in fairness to Powell, Rob, what would you do if 24 reporters all asked you 24 versions of the exact same question? At some point you might get a little frustrated. But these events can get a little humorous at times, and somebody asked him a question. So they were looking at the PCE. And the Fed is projecting a higher PCE at year end than it is now. And someone said, wait a minute, what's going on? Like, we thought you were getting inflation under control. You're actually projecting more inflation. And for people who don't follow this constantly, the PCE is another measure of consumer spending. Think about it as just a different way of measuring inflation. They're all different metrics that people look at. And Powell's answer was fascinating. He said, now, do we have high confidence that that's right? Referring to the Fed's projections. And he answered his own question, no. Holy crap. The chairman of the Federal Reserve, in a public press conference, flat out said that the Fed does not have high confidence that their projections are right. Now, that sounds really bad, but Rob, let's give Jerome Powell a round of applause for telling the truth in public. One of the things that I had DKI intern Andrew Brown do a few months ago for one of our monthly letters was he pulled the results of every Fed dot plot for the last 4 years or so, and we made graphs from them. And the thing that we realized was as little as 6 to 18 months ahead of the end of the year, the Fed was off on their projection of the federal funds rate by hundreds of basis points. They're not even close. And it's important to point out that the thing that the Fed controls, they can't control inflation. They can't control dollar creation. They can't control government spending. They control the Fed funds rate. In other words, they can't predict the one thing they control 6 to 18 months out. And so what Powell says, yeah, we really don't know what the PCE is going to be at year end. We give you these projections, but we don't have confidence in it. I mean, he's right. They're not capable of projecting anything. So let's at least give him the credit for telling the truth in public.
Yeah, that was actually what led to my question, based on takeaway is how much control, does the Fed actually have when you consider that one, their lack of confidence in their numbers, and then two, what you were just referencing on our last thing, the out of control government spending, right? And is this an argument for the abolish the Fed side that in reality they don't have any at all in terms of control of what can or cannot be done?
There's no question in my mind. We would be better off getting rid of the Federal Reserve and having the market set the rate of interest, which is the most important metric in finance. There's nothing more important than setting the price of time and risk. Um, I don't think we need the Federal Reserve to do that. The reason it's so difficult for the Fed to predict, there are a number of reasons. One, the data they're fed is nonsense and lies. We've talked ad nauseum on this channel about how the CPI is manipulated and deliberately inaccurate. We've talked a lot about the employment numbers. And we just saw a month or two ago, the Philadelphia Fed realized, oh, we lost 800,000 jobs. Literally, they'd counted 800,000 jobs that didn't exist. We regularly see revisions that are much greater than the amount of the beat, right? The government data is constantly revised and usually in the same direction. So they're working with flawed data. Any policy measures that they have tends to work on a lag and is indeterminate. You don't know. In my opinion, the most important thing is what we were just talking about. So if the Fed is trying to tighten business conditions and try to take some of the air out of the economy, trying to use higher interest rates to slow the economy, which is normally what would work, and Congress is spending, they're throwing trillions of dollars of stimulus into the market. And then, Secretary Yellen, who's the Secretary of the Treasury, um, is monetizing all of that. Well, that's a lot of dollar creation and that's a lot of spending. And it's all just excess demand creation. They're pulling demand forward using debt spending. That's offsetting everything the Federal Reserve is doing. So all of this is not actually Powell's fault. And as much as I've always been on team and the Fed, this is a situation where it's at this point, it's really Congress causing the problem. And again, they're not going to fix it. So we can get angry about it. That's not going to be effective. We can vote. I encourage people to go vote, but that's also not going to fix this particular problem. It may fix other problems. You may get policies you want. Um, the thing that you should do to deal with this, because getting upset isn't going to fix it, voting isn't going to fix this. The thing that you should do is prepare for more inflation. Now, do I know what inflation is going to be over the next 6 months? No. But over the next 6 years, you better expect the purchasing power of the dollar to decline.
Thing number four, Gary, going to, and speaking of inflation, inflation is down. Why are people still unhappy?
This is Rob, this is something that is causing me more frustration than normal. Um, I don't like when the press piles on to people. Um, Most of the country is pretty unhappy with the economy right now. And so we keep seeing every week, I just see more and more articles in the press extolling the virtues of our wonderful economy and castigating, criticizing Americans for not being more grateful. And the problem with that analysis, Rob, we talked about this last week. We talked about a bifurcated economy. It was in relation to that great post on X by Kobayashi letter. Um, and, it's something I've talked about a lot, where the aggregate data is excellent, right? If we look at GDP growth, um, if we look at unemployment or the number of jobs available, you draw the conclusion, wait, we have a terrific economy. The issue is that inflation and the kind of economy we have now attacks the living standards of less affluent people by a much greater amount. If you're wealthy, inflation can work to your benefit. One, you have cash balances, you earn more money on that. Two, and more importantly, wealthy people tend to own assets. So look at what's happened to the prices, the stock prices. Look at what's happened to the price of luxury watches or homes. or vintage automobiles. The kinds of things that wealthy people own, they've gone up in price, not in value, but they've gone up in price. But if you're less affluent, what you're finding is that your grocery bill, those increases are outstripping the increase in your wages, right? What people are paying for gasoline or energy or vehicles. Um, and remember, they've got to finance these things at higher interest rates. And so it really becomes a matter of this bifurcated economy. And the mainstream press is pushing this narrative that the economy is in good shape because they're looking at aggregate data that includes phenomenal results by a very small amount of people. But we ran the numbers on this and we looked at CPI inflation. And again, I think the CPI is understated. And we went from the end of 2019 to last month. Food prices are up about 26%. And I think that's understated. Energy prices up more than 35%. Gasoline, 40%. Used vehicles, they've come down from the high. Used vehicle prices have come down a lot. They're still up 33%, 32%. I'm looking at a bar chart here from where they were at the beginning of 2020, the end of 2019. Shelter housing prices at 25%. I think that's understated as well. And then add to that the fact that even if you were to buy a house for 25% more, your mortgage costs are going to be a lot higher because we went from mortgage rates of around 3%, give or take a little bit, to now more like 7%, give or take a little bit. So, what we're pointing out here is that even as inflation has come down, it's still people are paying an enormous amount more for the things that they have to buy these aren't luxury goods. This is not, resort vacations or four season spa treatments. These are the necessities that people have just to get through daily life.
Gary, with all the talk about inaccurate numbers, right? You just went through a slew of specific lanes, whether it be food, used car prices, housing, etc. Where do these people look, right? Because it seems like you have reporting and an economy that we know obviously favors the wealthy, and it seems like these metrics and reporting numbers do the exact same. I mean, where should we be looking? Is there anyone that is providing a more, I'd say, in touch evaluation of the economy that these people are making decisions off of? Because it seems like that's part of the problem as well, right? Is we have these individuals that have these metrics that they pull together certain exclusions and they include what they want to include to tell a story that they want to tell that again caters to a society that has always been better for the wealthy. So where do we look, or how do we fix this problem, knowing that this is the way things have been going on for, I'm sure, a much longer time than we're talking about just over the course of these past 5 years?
I think those are two interesting questions, Robert. One is who's doing the work to figure this out. And deep knowledge investing, we've been early on that. And in fact, I wrote an ebook a year and a half ago on how we had a bifurcated economy, how we were going to have bifurcated inflation, how I expected the price of some things was going to go up a lot and other things not so much. And I've been talking and debating with people all year about us having a bifurcated economy, which is a fancy way of saying that the aggregate numbers don't really apply. The full numbers don't apply. We're really looking at a small number of people doing well, a large number of people doing poorly. We highlighted the great work by Kobayashi Letter last week. Jim Iero on X has also done a really good job with stuff like this. Rudy Havenstein, one of my favorite Twitter or X follows, writes on this topic all the time. There are a group of us who have been looking at this and see it. So I think there is a way to get that information. I would not expect you're going to get anything accurate out of the mainstream media. They're pushing a narrative, and listen, they're entitled to do it, but I think it's bad analysis, and that's been that's been a huge part of it. Regarding the rest of it, I think it's people are in a tough position. And the thing that needs to happen is Congress needs to cut spending. One of the things we've talked about a lot, what Congress will do is they pursue these policies supposedly in the name of helping the poor, the less fortunate, and they say we're doing this to help you. But inevitably, those programs end up making things worse for the people that they are supposedly trying to help. And so, just one great example, a few years ago, the government was handing out stimmies, right? People got $800 checks, $1,600 checks. And people thought, wow, great, free money. Well, what happens when you pour more money into a system that's not producing more goods? The only thing that can adjust is the price. And so prices went up. And so you have all these people who they loved getting, their $800 of stimmies, their $1,600 of stimmies. But when their monthly expenses went up by $100 or $200 every month that year, every month the next year, every in perpetuity, that's $2,400 a year. And so basically what I'm telling people is you are paying for your stimmies. They tell you it's free. It's not free. The money that they're spending, they tell you it's free, right? You get something from the government, you say, oh, great, it's free. It's not free. It's not being paid for by anybody's taxes. It's being paid for with more currency creation, more debt. And what that does is that leads to more inflation. So, yeah, it feels really good to get things for free. It feels really good to get money for free. But when your cost of living goes up by more than the amount that the government gave you, you're paying for this. It just feels like you're not. And so, the fact is we would be better off if without a Federal Reserve and with a Congress that spent a whole lot less. I put the probability of that happening right around zero. Um, and in fact, I was reading yesterday somebody who disagrees with me, John Malden, who writes a really interesting weekly piece. I read it, and I had a chance to talk to John directly when he did a Twitter space with Michael Guyette from the Lead Lag Report. And, he was talking about how he thinks things will be okay. And I said, wait a minute, we're both seeing the same thing. We both see this disaster. Why do you think it will be okay? And he gave me an answer then, this is several months ago, that matched what he put in yesterday morning's column. I was reading this Saturday morning. And Malden's answer is because we're Americans and we'll let things get really, really bad. But when the emergency comes, when things are really horrible, we will pull together and do the right thing, even if it's painful. And it's sort of along the lines of, I think it was Winston Churchill who said, we can always count on the Americans to do the right thing after they've exhausted all other options. Uh, and so, look, I think I think Malden has an interesting point of view. I like reading his column. I think he's a smart guy. I respect him. I respect his work. I hope he's right on this. I hope he's right, that I'm wrong, and that I get the opportunity to apologize to him in public. Right now, I disagree with him. I think empires decline and they all collapse with too much spending, too much war, too much debt. And I think that's where we are now. And I don't see any indication that anyone in Washington actually has an inclination to do anything about this. And, I could see a scenario where if John Malden were able to address the American people and say, okay, look, everyone on the path that we're on now, we have a 100% probability of disaster. I'm going to propose some changes. Those changes are going to be painful. It's going to be hard. But when we come through the other side, we will no longer be facing disaster. And that actually could work. Like, could someone make an appeal to the American people and say, I'm going to ask you to go through a rough period for a few years, but we're going to fix this and no longer be a society in decline, an economy in decline. Um, yeah, that could work. I think Americans, if approached like adults, could and would do the right thing there. But here's my question: who's going to do that? Who in Washington, other than Rand Paul, who he's been on the right side of this, is in favor of that? Right? It's certainly President Trump is not going to spend less. his Republican allies in Congress, they're not going to spend less. So, I think if John Malden were able to make an appeal to the American people, it could work. But I don't see anybody running for office saying to people, I'm going to ask you to sacrifice and live at a lower standard of living for a few years so that we can get this under control. There's just nobody doing that. Rob, you tell me, because you're in California, home of great fiscal policies. Who do you see in the rising ranks of either party who would actually do this? And even like look at the outsiders like Tulsi Gabbard, Kennedy. President Trump is an outsider to the extent that you can say somebody who's had the Resolute desk as his personal desk for 4 years is an outsider. Like I don't see anybody advocating. So what are you seeing? Who's going to take up that mantle of we need to do the right thing?
Yeah, I think it's a very barren cupboard in terms of options that we have, and you're right. It seems they're a constant revolving door of reminds me of those toys, right? Pull the string and they just say the same 4 or 5 things over and over and over again. You get a few shock value type notes here every now and again as well. But yeah, it is frustrating, and there's nothing that's clear on the horizon in terms of who's going to pull us out. And I think credit to John, right? But I think it's very fantastical, whimsical thought and theory, right? In terms of hoping that Americans will be able to pull ourselves up by our bootstraps, right? Good old American way. But time will tell. We will see, and we will definitely keep tabs on those developments as things settle out.
Listen, let's not make fun of him for that, because the truth is, I hope he's right. I would love
Hey,
nothing
likewise.
more. Yeah.
I think we're in a much different America than we were even 20 years ago, and especially when you go back into the 70s and 80s, right? When we had rampant inflation. I think we're a much different country than we were then.
Yeah, unfortunately, that is the case. But again, I would love nothing more than to,
Likewise.
be here in 5 years and apologize and say, hey, John, you were right, and mea culpa. Hey, here's an interesting one for you, Rob. I saw some speculation in a weekend opinion piece um, that the one guy who actually has a record of cutting spending is Governor DeSantis of Florida. Now, he is not in the running for president, and I don't think he's likely to be a vice presidential pick. Um, and people were pointing to the fact that he's actually cut the budget in Florida. The thing that I think is different there is he's got a constituency that understands that if they don't want to have an income tax and Florida doesn't have an income tax, that that they can't spend on everything everywhere all the time. I don't think if Governor DeSantis were to become president, he goes to Washington and goes to Congress and says, "Look, this worked in Florida. Congress on both the left and right, find me, $1 trillion of spending cuts." Yeah, do you think he'd succeed at that?
Yeah, I mean, the United States is such an interesting place, right? Because it's like the way I see California, especially being here, and I'm sure you similarly to New York, right? Is they're different worlds, right? There's different needs, demands. Even you take Florida, right? So it's like, okay, you take that small population in the grand scheme of things, and you're trying to extrapolate that across the entire United States, right? And how exactly does that work? And there's a variety of different reasons why it might or might not work. And that's also based on the individual states as well, right? I think I even see disconnect here in California. Just the simple fact that a majority of lawmaking is done in Northern California. And you go to Northern California and it's complete polar opposite as well, just in terms of the general needs, the general problems that each individual place is going through, right? Obviously, Southern California, you just look at the population expansion, you've got immigration issues at the border, right? And so those problems are so much different. And then you look at it at scale too, the amount of people that are just in Southern California. You've got what, 35, 40, 50 million, I think it might be when you take into account Southern California, greater LA basin, etc. So yeah, it's interesting. It's such a complicated problem, and you see all these situations like a Florida. Okay, great. We'll take that and apply it in California. But California's problems are a lot different because I think a lot of what we're dealing with just based on where we're located, right? So yeah, I don't know. I don't know. And you don't I as a younger voter, right, I've never been able to appeal either to somebody that I feel like gets the actual problems that are going on, right? It's a lot of this just super high level ivory tower type slings and arrows back and forth, right, between these two political parties, which I think speaks to a lot of what we've talked about on this show, right? Is there's just an absolute disconnect between, and it's getting further and further up the scale, right? I think it's middle class, right? Even moving up to what you used to consider, I think, wealthy in that regard, right? $1 million. I remember when I was growing up, it's like, oh, you make $1 million, right? You're set for life. You watch I don't know if you've seen the movie Blank Check, right? And he finds a blank check and they write it out for $1 million, and he goes and cashes it, and he's buying mansions and butler service, etc. And now you're looking at it, especially here, Southern California, $1 million.
Yeah, you get a
A
two-bedroom
million
condo.
dollars. That's nothing. That's nothing. I don't know how you get by or get ahead, right? You might be okay, right? Somewhere in that middle ground, but yeah, it's tough. It's tough. And then you take that even further down the food chain, right? And I wonder, and it's not that it's not derogatory, but it's like, how do these people that are doing the jobs that we need, that are so critical and important at that lower pay scale now with inflation, right? How are they making ends meet, right? And then you got obviously the corporate argument coming back for minimum wage and etc. And it's a much different, and that's my point, right? It's like having this, okay, things are going to get better because we're Americans and we have that ability. It just, I don't know. I think the younger generation, that's kind of lost, which is also probably part of the problem, right? That American pride, I think that the nation was founded on and that we always carried through those decades has gone away in a lot more ways than one. I think that is a problem. I think that maybe that is a piece of the puzzle, right? And that what John's saying is, hey, we need that initially, right? We need that unity, right, to move us all in the right direction and understand that, hey, problems here are different, but we need to try and take care of everybody's problems. So
So everyone, that's Robb Fahrion making the case for federalism, the breakup of California into multiple states, and societal collapse. FAH.
oh yeah, I get myself in trouble when I open my mouth. No, but I mean, I think it's, you're talking about, myself, like, okay, not spending a ton of time in understanding these policies and, understanding how these decisions are made. Like someone, you are obviously spending a lot more time here, right? But that's such a small percentage of people, right? So you think about, okay, all these others that are just seeing things in plain sight, right? And trying to make sense of it, listening to what's being told. Yet, how do they even trust that with everything that's gone on over the last however many years, too? It's just, I think people are confused, right? I think people are confused. I don't think they know what to do. I think they're just holding down the batting down the hatches, right? Taking it day by day. And it's scary. I think it is a scary situation, right? Because in my opinion, I don't see people picking themselves up by the bootstraps and saying, okay, yeah, let's go get things done. I would say the sentiment, at least I see, which again, anecdotal, but is laissez-faire, right? Whatever happens, happens. It is what it is. There's nothing I can do about it. I think that I see with people my age more often than not.
Rob, I think you make a great point. I think that your attitude, the way you approach these things matters. At Deep Knowledge Investing, we think there are always solutions, right? Good market or bad market. We're always going to find a way to make money, or at least, have a plan for
Right.
something that hopefully will result in us making money. Obviously, not everything works every time. The one, the one thing I would say in favor of some of these younger people that you're talking about is I think they're starting to realize that the system is unfairly biased against them. that it has lined up against them. And I agree with you. It would be better if their response was along the lines of, screw you, I am going to find a way to succeed around you, despite you, past you. Um, a more combative attitude would be good. But I also understand when you grow up in a place that doesn't value you, that doesn't value your work, that doesn't really want to educate you properly, that tries to keep you ignorant
Yeah.
of all matters of finance and budgeting and investing, and then debases the currency and raises asset
Right.
prices so that the money, when they
Right.
work, the money that they earn isn't enough to support themselves. And, lower interest rates and free money for a decade and a half led to a huge bubble in asset prices. So for a lot of these people, the idea of buying a home is simply not realistic. That's not being 30 years old today and not being able to buy a home is not necessarily hey, put more effort in, kids, bootstrap your way up. I think for a lot of them, it's not possible. It's not
It's
realistic.
not. It's
Yeah,
not.
the
I
system's lined
I
up
can
against them.
I can tell you matter of factly, it's not, right. And here's what's happening too is like, okay, you take California for example, and obviously we all know the exodus out of here, right? But that becomes the only choice, right? And so what you're having this just dispersion of people. They're having to leave. They're having to go make those very, very difficult decisions, right? Depending on a lot of people that are here too, you forget they were born here, they were raised here, right? And so you have just this complete dynamic shift in terms of, well, who are the people that are here that are now leaving? And you're having to make those decisions. But same thing, it's like, okay, even you exit outside of California as well, at a 30-year-old making a salary in a different location where, yeah, it might not be as costly to live, but the wages also reflect that too. They're still in the same boat. It's proportional. Um, so yeah, it's crazy. I have a quick story too. So a kid reached out to me. He's in his final year of college. He has, I think, I don't know, 2 semesters or a couple quarters left, whatever it was. And he's studying something that, looking back at the lot, he's frustrated that that's what he went to school to study. Because, and the reason why is he's now, you're 18 years old making these decisions, go and get a degree in whatever it may be, right? And he's looking at it and he looks at, if I spend the next year finishing this degree and then the outlooks and prospects of what jobs I will actually get with that degree and what they pay and what it actually costs to make a living. And this is someone coming from, he's in a tough spot, right? Let's just leave it there, generalization. And he told me, he's like, you know what, I'd rather sit here work with you over the next 12 months versus going and getting my degree and figuring out how I can be creative, build my own business, make it my own way, because I just don't see a means to the end with the traditional path and route. And he's willing to completely forego that because he doesn't see a path out, right? And so that now you're getting into, obviously, grads currently, I think are having to make those tough decisions, right? That even myself, I never thought about that, right? Back in 2007, 2011 when I graduated. So yeah, it's just, the stuff I'm seeing boots on the ground and then having conversations with my group of just people I'm around my age as well. It's and seeing, right? Seeing, okay, who does own a home, who doesn't own a home, why not? You're again talking about people that do have stable jobs and do things the right way and try to do things above board. And the opportunities just aren't there, right? Or you're looking at a situation where you're having to completely uproot everything, which I think there's a lot of cons to that are not talked about enough as well, in that you're completely uprooting your family or your ability to be around your family, your friends, your core kind of nuclear group, right? That's going away, to where we hear a lot of people that do pick up and go, they're sad, they're lonely, they don't have that community. So there's that issue too. So it's just, yeah, it's a, I don't know, I hope John's right.
Yeah.
Thank you, John. Yeah, I hope he's right, but it's I don't see the path forward yet, right? You're holding on hoping and willing to accept somebody that we think can give the path forward, but that's so few and far between now as well for obvious reasons.
Yeah, Rob, I think you're right. I mean, I think it's only natural for a lot of young people to say, "Holy crap, you guys stacked the system against us." It's not
Yeah.
that, that ability to get a leg up has been severely hampered. Um, and I
Yeah,
understand
I
that.
mean, that's my perspective. I think looking at it now, I mean, thank God I started my business when I did, right? That would have been 2015, but it wasn't for any of the reasons that we're talking about right now. But looking back, that to me has been a critical piece because it has insulated me from a lot of things because I have much more control over my wage growth, right? And building that up as to where, you see some of these, they're sitting in these corporate jobs and, oh no, you don't deserve a raise because our review period isn't for another 9 months, right? And you're going to have to wait until that. And then some superiors that are reading a survey are going to determine whether or not you get your 3%, 3.5%, 4% merit increase, right? And so I think that
Or whether it goes to a different group of people based on characteristics
hundred
you can't
a
control.
hundred percent, right? Versus for me, I look at it like, okay, I think now more than ever, we need more people that are creators, that are risk takers, that are going to figure out how to solve problems and solutions on their own. Because this entry into this just system that clearly is broken, right? I think that's what young people are seeing is why am I just going to line up in this queue, and do my I'm not advocating against college degrees, right? I think there's value and benefit to it, but it's also those years that come after, right? Just line up in this queue and the system will take care of itself, right? And you'll be moved up that just I just I don't see that. I don't see how that solves any of our problems. So yeah, it's going to be interesting. But yeah, again, as a business owner, I think that's where my flexibility, right? The ability to make quick decisions, the ability to take more risk, right? Obviously, there's a lot more risk and stress involved with it. But I think a lot of younger people too are seeing that that's kind of what's necessary now to get ahead because just the old way of doing things are no longer they're just not palatable. You can't survive. You can't live.
And
It's
that's and you know what, Rob? That's where you got to go to like the Bruce Lee philosophy, right? Where he talked about his martial arts. He said, "Be like water." Right?
Mhm.
If the circumstances change, you need to change to match those circumstances. And it's something I think about a lot. There are a lot of people screaming for the Federal Reserve to lower interest rates because it'll make asset prices go up, and that's how they make money. Well,
Mm.
then, but that's not a demonstration of skill. That's like you're sitting there and waiting for somebody to bestow you with the
Right.
conditions you need.
Right.
And, a million times I've heard people say, well, we had bad performance, but it was a bad market. It's not our fault.
Yeah.
And but amazingly, when it's a good market, they don't say, yeah, we got lucky. We are just sitting here and the Fed lowered rates and money was free. And so we did really well. Right.
Right.
They don't acknowledge it. The thing that we never say here at Deep Knowledge Investing is it's a good market, it's a bad market, nobody cares. Whatever market conditions are, it's our job to find a way to make money for people. That's kind of our version of be like water. Don't complain about the conditions, find a way to adapt to it. And so, and I know we have a number of young people who subscribe to this channel. If you guys are watching this, I would just advise the same for you. And if you want to point out that conditions are not fair, that the system is set up to hold you back, I completely agree. That is
Yeah, and
it.
I think the best way to show that the system is unfair is to take it's to take unique creative approaches, right?
Yeah,
Um,
step
again,
outside of it and
right.
find a way.
Yeah, and I think, hey, getting a job and getting stable income, of course, those are all great things, right? Building up some sort of nest egg and retirement of sorts, right? But I think you got to have something else nowadays, right? You
Yeah.
you have to have a dual source of income or something that allows you to hedge, right? I mean, there's just too many people that tied their wagons, and now we're seeing, I think, them getting drugged through the streets with a lot of the situation, right, with this inflation, with the wage gap, right, that we're seeing and experiencing, and it's making it very, very, very tough. So
Yeah.
Yeah,
For
that's
the
one of the things I've always diversification, right? And being involved in a lot of different things. So, but yeah,
yeah,
good conversation.
for the people who are complaining, you're right. You're right to be angry. You're right to complain. I will validate all of that. But still, you are where you are. So
Mm.
get up, be creative, find a way. Don't sink into it. Don't just sit and, you know, is it your fault? No, it's not your fault. The world is the way it is, but do the best you can to find a way around, through, over, under, whatever you need to do.
All right, to reset everybody, this is the Fed has no idea what it's
Yeah.
doing issue. We're gonna wrap it up. Good conversation, Gary. Thing number 5, with the petrodollar falling, what happens to the price of oil, Gary? Definitely interested, especially with DKI's oil positions.
Yeah, we've had huge oil positions since late 2021 that they've been hugely profitable. Back a couple of years ago, I saw a phenomenal series of posts on Alex McCrease's blog, Contemplations on the Tree of Woe, which is a phenomenal name for a blog. And he wrote a 4-part piece talking about the creation of the petrodollar. And that was the event in the 1970s when the United States agreed to provide security guarantees for Saudi Arabia in exchange for the Saudis agreeing that they would only sell oil in US dollars. And then if they had excess dollars, they would use those to buy US treasuries. And what that did was that meant that every country who wanted to buy energy, which is every country, needed to have dollars. And that created a massive demand for dollars for the following 50 years. In exchange, the Saudis had stability and protection. And so, that was the agreement that was made. Um, and Alex McCrease wrote this phenomenal 4-part series talking about the history of the petrodollar and his projections for the future of the petrodollar and what was going to happen. And he pointed out how much demand for the US dollar relies on everyone all over the world needing dollars to buy energy. It's something that everybody needs. And I reached out to Alex and I said, "This is a phenomenal piece. Can I host part 1 on the DKI blog?" And he was kind enough to give me permission, and we started talking. And at some point, we agreed that I would write part 5, and I did. And so Alex's 4-part series talked about the history and the future of the petrodollar. And what I did, because this is typically my thinking, is less is this good or bad, and it's been bad, and more, okay, what do we do now? Right. And I wrote part 5 telling people, okay, look, Alex has pointed out a huge problem. He's right. No one panic. Don't get upset. What do we do? Right. And part of it was things like own energy. And we made a fortune in energy plays. We've more than doubled our money in uranium. We've made 4 to 5x our money in Bitcoin. We've done really well in gold. Hey, these are the kinds of things that I told people to do in response. And so Alex was able to put all of that together, and he turned his 4-part series into a book called Running on Empty. And it sells on Amazon. I highly advise it. I've read it 3 times. So if any of you want to know what I think, that's what I think. And he was kind enough to ask me to write the forward and then, put my name on it as well. Again, I only wrote the forward. But I think it is a phenomenal piece of work. And now that we're 50 years into the creation of the petrodollar, and there's a lot of talk about the fact that it is ending, that the Saudis are pricing oil in currencies other than the dollar. They're selling oil in currencies other than the dollar. I'm starting to see questions about that, and it's great that Alex was 2 years early on this, but it's great that people are starting to pay attention to it now. I think that's a huge plus.
Gary, you think that crude will continue to be priced in dollars, even with the Saudis accepting other currencies? What exactly? Just talk to us about what that means. What does it look like for the price of oil? What does it do to the dollar, right? When there is going to be this opportunity to purchase with these other currencies.
I think what's going to happen for the near future, yeah, and by near, I mean, next 5, 10 years, um, is we're going to see the same kind of pricing in oil that we actually see in Bitcoin. And so one of the things that people complain about regarding Bitcoin is they say, well, it's not really a currency, you can't buy things in it. And everybody's used the Lightning Network has said, wait a minute, or everybody, who's been to El Salvador or tried to pay their taxes in Japan, has said, wait a minute, wait, I can buy things in Bitcoin. You actually can do that. And then the critics, so the critics are wrong on that, but then the critics make, in my opinion, an excellent point. They say, okay, you're paying in Bitcoin, but the price is in dollars or pesos or yen. Um, and it's just being converted at an exchange rate. And that's valid. That's true. Right. So if you want to go buy something with Bitcoin, I'm making this up. Bitcoin, I think this morning was around $66,000. So if the price of it is, of the thing that you want to buy a car for $66,000, you could pay for it with one Bitcoin. If the price of Bitcoin goes up, you'll pay for it with less than one Bitcoin. If the price of Bitcoin goes down, you'll pay for it with more than one Bitcoin. The point is, you can use Bitcoin to pay, but the price is being set in dollars. And I think that's what's going to happen with energy. I think, the Saudis have already started accepting non-dollar payments for oil. They've already broken the petrodollar. Part of it is because they despise the current White House, but they have their reasons. Um, and so what will happen is they may say, okay, if oil is $80 a barrel, and the Chinese come in and they say, we want to pay with yuan, they'll use the exchange rate and figure it out. And if the Japanese want to buy oil in yen, they can do that, but they'll use the dollar exchange rate. It'll all end up netting to an $80 a barrel price in oil. So I don't know that breaking the petrodollar changes the price of oil. I think what it does do is it creates less demand for the US dollar over time. It creates less urgency for countries to hold dollars because they won't need to pay for their energy in it. And if there's less demand for the dollar, well, we have less interest in the dollar, less purchasing power of the dollar, and that's how you end up with more inflation. So I don't think all of this so much changes the price or the value of oil or energy trading. I think what it does is it weakens the value of the dollar over time, just like over the last 50 years, we've had artificial strength in the dollar as a result of every country in the world needing to buy dollars in order to buy oil. So I think that's the direction we're going to head. It'll be interesting to see what happens. Regarding Japan, they would likely see higher dollar prices for oil as the dollar weakens, but similar yen prices, because a weaker dollar would comparatively strengthen the yen. So, this thing goes in circles and circles. That's my view on it now. We'll have to see over the next few years what happens and how much oil trading takes place in other currencies as well.
Great stuff, Gary, as always. This concludes this week's edition of The Five Things. Thank you so much, everyone, for tuning in and watching wherever you may be coming from. Please head to the deepknowledgeinvesting.com website. Grab a free subscription to be added to our free list, as well as premium subscribers will receive content and information on a primary basis, as well as some things that are paywalled, and all current recommendations, as well as exit points on positions. Gary, thanks so much again. Please give Gary a like, follow, subscribe to the channel. Every little bit goes a long way. Please share, or just even thank you so much for watching. Gary, any final thoughts?
Rob, thanks so much for doing this with me at 8 a.m. on a Sunday morning. Very nice. I appreciate it. Suggesting to everyone go buy Alex McCrease's book, Running on Empty. I strongly recommend it. It's not long, it's easy to follow, but has a lot of really valuable historical and financial information in it if you want to understand what's going to happen in the energy world over the next few years, this would be one of the key things I'd be looking at. Other than that, thank you so much for spending your time with us. I know it's valuable. We really appreciate it, and wishing everybody a happy Father's Day. We'll see you all next week.